Right, hello everyone and welcome to the new video, strategy video. So this is a strategy I've been working on. Some of you might have seen me talking about it in the chat room. So I'm just going to go over what it is, and then I'm going to go to the charts to show you some live examples from the past few days that I have actually traded myself. So here we are on the chart. We have two vertical lines on the chart. One is at 12 UK time and one is at 3 p.m. UK time. So they're 3 hours apart. So what we're doing is trading the New York kill zone. So in between these lines will be the opening of the New York session. So what we're looking for is specific patterns and things to happen within this time zone. So between these lines, you're likely to get either a continuation up to the end of the line, which you can't really trade. It's just a continuation in one direction, either go up or down. So that's one kind. The second kind is a retracement, which you can trade, which is more high probability, and you can trade it. So let's say we are getting a downtrend like this, and then it comes within the lines. It's likely to come back up to the to the 61.8 fib. So it comes back up to 61.8 fib, which is the optimal trade entry level, and then it's likely to carry on down, and that is your trade. The levels of take profit and stop loss will be on the fib, which I'll show you in a minute. But that is setup number 2. So the setup for number 3 is completely the opposite. So on an uptrend, you have a movement like this, and then you have a retracement of a 61.8 and then a continuation up. So you'll be entering on the 61.8 on the fib, and then your stop loss would be down here at 90%, and your take profit will be take profit 1 here, and so on. But I'll go over that in a minute. So that is for a upwards move. So that is the second basic thing you're looking out for. So it is a retracement entry. And the third kind is a pattern entry. So say you got a pattern like this, and it keeps bouncing off this trend line. Once it gets in between these lines, the pattern is likely to break and stay in the direction of the pattern break. So you're likely to get a break like that. Sometimes you get a retracement and then a continuation, or sometimes you'll literally get a break, and that is your trade. But if you get a clear break, you're most likely to get a retracement here, and this will be your optimal trade entry of the 61.8 on the fib, and then you can trade in that direction. So sometimes you get a retracement, sometimes you don't. The other pattern is literally like a wedge, or sometimes you'll get a range, but it's all basically the same. You'll get some kind of resistance and support, and once we are in the time zone that we are trading and looking at the charts, you're likely to get a breakout and then a continuation in that direction, and that is your trade. Your trade is to either enter here or enter here before the break. And what we are looking for in signs of confirmation is liquidity zones on the 15-minute. So there we have 3 patterns we are looking out for. The patterns within the zone, so range, a wedge, or just a strong support like that. And then we've either got either full bullish move or full bearish move. And then the other one you want to be trading is the retracement, like that. or we could go up and then like that. So they are the things you want to be looking out for. So it'll make more sense in a second when I go to the charts. So range like that. So let me go to the charts now and you will see what I mean in depth. Right, so we're going to start from the top, which is Euro GBP. And we go, what I do first is on the 15-minute chart, you literally look at your screen like that. So say it's there. And you literally label in any liquidity areas on the previous price action from that same day. So you'd have it like this, just showing where liquidity is, and the direction you want to be aiming for is same as the liquidity. Okay, so then we go down to the 5-minute time frame, and you can see that on this pair today we had a clear movement up with hardly any retracement, so it's a full bullish day. And then as you see, we get to the end of the time zone and it finishes. Same goes for the previous day. Let's just have a look at that. Let's have a look here. So we would go to the 15-minute. We got some liquidity sitting here, here, and here because we had a big bullish move. So we're looking for some kind of retracement. So you'd be labeling up your liquidity areas like that. And so that is telling you that you are favouring a sell position within this zone. So now you want to look for some kind of setup. So you go down to the 5-minute time frame. And you wait for it to come into the trading zone. So between 12 and 3 p.m. It's 2 hours in front on this chart. And what we have here is a swing. So this is your retracement. So when we get the fib out, get the Fibonacci out when I can find it. You pull it from the last swing high down to the swing low, and then you want your retracement to trade downwards. So you place it on the bodies because you're only using the 5-minute time frame. So this is quick scalping trading. Okay. So you'd be placing it like that. So then you would be entering a sell on the 61.8. Your stop loss would go on the 90. And then your take profit, most of the time you want to be aiming for this symmetrical price swing down here. Because that will give, most of the time it goes down to that. Sometimes it goes a lot further. So most of the time I take most of my profit on this level here and then leave a remainder 20% of my trade to run, and I move my stop loss into profit. That is how I do this setup. So what you're looking for on this setup, it usually gives you around about a 1 to 5 risk to reward once you get these setups, and you can find these most days. The examples I'm going to show you in a second is going to be quite a few, and it's going to be over the last 2 days. So you're going to be able to see roughly 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Got 11 pairs, and on nearly all of them it shows you a successful trade setup. So on this day you got a optimal trade entry, basically a retracement to go down further to collect liquidity. You would have took most of your profits on this symmetrical price swing, and then you would have moved your last bit of trade into profit and let it run, and it would have run all the way down until you was happy with what it did, and it went down to the blue line. So that was that trade there. So let me just go on to the second pair. So Aussie D, US dollar. I'll speed this up now. So we start on the 15-minute time frame. You literally look for liquidity. We have liquidity sitting down here. If you don't know how to spot liquidity, then there is a video on the ICT playlist on my channel. it will show you how to spot it using the candles. So on the 15-minute time frame, and we can see a support going up here, and as you can see, that's been following that support. So we are looking for a sell setup to go down, clear this liquidity, and this is our entry zone here. Then we go down to the 5-minute time frame, we look to see what's happening, we get the fib out and start testing, going from previous highs to previous lows, seeing what's happening. So you could have got a entry on this retracement here. You would have been entering on 61.8, stop loss at 90. Your trade would have still been live. You would have got a little bit of drawdown, and then you would have been in profit, and you would have gone down to the symmetrical price swing, which was there on this candle wick, and you would have took profit, and then that is your trade complete. Let's just see if we could have got any other entries. Then we go from the second one up here, zoom in a bit, we go from the bodies, go down, and that would have given you another successful trade. You would have got a retracement up to here, enter on the 61.8, stop loss would have been on the 90, and this wick would have just missed your stop loss. You want to be using a raw account on this trading strategy because you don't want to be stopped out from the spread. If you are using a spread, then I suggest using I'd say 100% stop loss, which is there, or look for a broker that gives you a raw account, because this is only on the 5-minute time frame, so you want to be getting as close to price as you can, because it's going to be such a close movement when you're trading. So that would have been your trade here, or you can just add your spread onto whatever level you have it at. So you would have had your level there, and then whatever the spread is you have, you would have added it onto that, so that when price comes up, you're not knocked out, if that makes sense. So anyway, retrace and then goes down to the symmetrical price swing, also the same level on the wick as before explained. So that would have been another successful trade. Previous day, what do we have? Here we are on the 5-minute time frame. So you'd have done the same, look for liquidity. Once you get the hang of it, you don't really need to look for liquidity every day, because you'll notice where it is. So there is a bit of liquidity sitting there. Anything on the higher time frame. So yeah, we've got a lot over here. So we're likely to go up from this movement. So we're looking for a buy. And so when we go down to the 5-minute time frame, go sideways, and what do we have? We literally have a optimal trade entry there, and as you can see, when we zoom in, we would be buying off the 61.8 and aiming for the symmetrical price swing. So we'd be buying here off this level, and then aiming for this take profit up here. Now we go to the next one, gold. Let's have a look at gold. Same thing, you look for the liquidity or your analysis bias. And today we got a range on gold. So 5-minute, we got a range. And then just before the end, it broke up. Range broke, we got a retest. So this is your pattern break. But also with the news, we got the velocity kicked in. So that is an ideal position to enter in at. Once this broke, you know it's going up, so then you could have easily got a trade off that. Let's see what's happened before. Day before, we got a optimal trade entry, which was from here up to here. So your entry would have been here within the red lines. Stop loss would have been here. And then your take profit is 1, to 3 symmetrical price swing just didn't get hit, so you'd have just missed out on that max profit, but you'd have still profited it, as you would have been moving your stop loss up as you feel comfortable. So let's go to the next one. Silver. I know I don't really deal with silver. Euro USD, same thing happened again today. We had a pattern support, liquidity below it, fake breakout, retracement, and then a continuation down. So you'd have entered in on the retracement. There was no fib level on this. You'd have just had to enter in manually and use the previous high as stop loss. And then you would have took profit as you saw the previous support. Let's have a look on the previous day. So here we are. Here is another fib. Get your fib out. 5 minute time frame. Looking for liquidity. So you have the 38 there. So you'd have done it from this swing here, and you would have got the 61.8 entry, stop loss here, and then you'd have took profit. As we went up, we didn't go up that far on this day. We literally went sideways, and then we went to the symmetrical price swing. So this would have been a longer trade. So it would have come across like that. Your entry would have been here on either one of these. Stop loss down here at 90, and then your take profit, the last take profit up here at the symmetrical price swing. So you'd have gone past the Asian session into the London session to get that take profit. So that is a longer one than expected. GBP USD, same old thing, 5 minute time frame. See, once you get the hang of this, you'll recognise what you're doing. So it would have been back here, and you'd have seen that support going along there. When it comes up, support going along there, nice head and shoulders pattern, and we had a break downwards before the actual time zone opened. So you'd have been looking for a bearish move, and I'd have been looking for a retracement up to this line or a optimal trade entry. If I got both, that would have been double confirmation. So when I zoom in, you could have dragged your fib out like that, dragged your support along like that, and it lines up exactly with the 70.0, the 70% on the fib. Again, your stop loss would have been at 90, and you would have took profit down here at the symmetrical price swing. So that would have been another successful trade. You've got to remember, each one of these trades is around a 1 to 5 at least risk to reward. So you can't possibly trade every single setup that day, but I'm just showing you that they are there and very visible. Day before, we had a pattern break. So as you can see here, we had a wedge, and then we simply had a pattern break. Did we have a optimal trade entry on that? I'm not sure. So let's just check. No, that was only a 38. So most of the time when you get a pattern break, you don't really get the optimal trade entry or any kind of retracement. It's normally this pattern is breaking and I'm going in that direction. So once I break, you better jump on board and use your own stop loss. That's kind of what it's saying. Next one, I'm going through this as quick as I can. This one was today. USD JPY, liquidity down here, liquidity down here. I am looking for a sell setup. So, looking for a sell setup. So you might have hit stop loss on this one because you would have had a support going along there. So it's showing you we are still bullish. But you might have thought, okay, I'm going to drag my fib from there, stick it there, and I'm going to be entering on the 61, which is here, and I'm going to be entering to go down. So you might have hit stop loss then if you thought that at the time, but that would have only been one stop loss hit. If you left it a bit, then you could clearly see we're getting a nice head and shoulders. Then we got a support being broken, and then we go down to collect liquidity. So that would have been a late setup. You'd have probably took one stop loss hit from that if you traded it. This one, same again. We've got a nice support. We've got liquidity down here to see, and we have got, by the look of it, a nice optimal trade entry to be getting in at. And there you go. You're entering on the blue line, stop loss up here, and your symmetrical price swing is your final take profit, roughly 1 to 5 risk to reward. So that is another successful trade. So if you succeeded on that one, you would have been 5, say you risked 1%. On that one trade, you would have been up at least 5%. So then taking this 1% stop loss hit over here still leaves you at 4% gain. So even though you took one stop loss. Same here, which happened on today. I'm probably boring you a bit now. We had a support liquidity sitting up here, horizontal line along here. So we're looking for a break of this pattern. We had the break. Luckily on this one we had a retracement. Get the fib out. Let's see what we got. We'll either be entering on this line. Got a nice order block sitting there, so that's another confirmation. And then if we get the fib out, let's just see if we've got another confirmation with the optimal trade entry level. Drag that from there to there, and you can see we literally come down exactly to the optimal trade entry level, bounce off it and go up. And so that's likely to go up a bit more. That was the second retest. So we went to target one on there. You would have even took profit up here or took profit somewhere along the line, or you could still be holding and have your stop loss down here. So either way, it is still good and good profit. Day before was again a wedge pattern situation. So as you can see here, we had a tight wedge broke, retested, and then downwards we went. Did we get an optimal trade entry on that one? Let's just see. There you go. Nice optimal trade entry on that one. Entering here on the retest. Stop loss here. And then you are looking for a downwards move. That would have took you down to target 2. Yeah, just target 2 on that one. But that is another successful trade. Next one. So this is expecting a bullish move up. And you have got another optimal trade entry, as you can see there. Optimal trade entry level to go up, went to nearly the symmetrical price swing before coming down. What happened the day before? We had a optimal trade entry once again. Price swang from there to there, giving you, I'm just doing this roughly to speed it up a bit. Entering here on the blue line, stop loss, symmetrical price swing. What else we got? Oh, it's getting long now. So as you can see here, nice support running up, nice liquidity box sitting below. So we are looking for a sell setup, and we are looking for a optimal trade entry, and there you have it. Entry here, stop loss here, take profit down here. Cool. And this one before was a one direction day on that one, so there's no opportunity to trade in that. GBP, JPY, again, same day thing today. Liquidity zones down here, support goes into the time zone. We have a bearish expectancy. This support is likely to be broken. This literally happens nearly every day. You're basically bound to find setups on some pairs. If you stick to the major pairs, then you're likely to find a setup. This one, these wicks here give you a clue on what's happening. They're literally coming back up to that level, giving you a price to sell from. So once you notice that, you can either put a fib from this last swing down to this bit here, which will give you a optimal trade entry area at the 61.8. That's why these wicks are coming up to that level. Stop loss here, and then you are going down to the symmetrical price swing. Did I do the previous day? Here's the one. Downwards channel, basically bouncing off the outside of the channel. We're down here. We're looking to go back to the top of the channel. We're looking for a nice optimal trade entry area. So we swing from the bottom down there to the next swing high. Optimal trade entry, swing high. Next day. So I'm just showing you this now so you think, oh, hold on, I'll look at that tomorrow. He's actually making a bit of sense. That's like a trade every day, every pair. Yes, you can find these every day, but I'm just showing you now so you can re-look over it yourself as the days go past. So you might get to the end of the day and think, hold on, I'll just check on what he's saying and see if I can spot those. And once you start practicing how to spot these, then you can start looking into trading them. And I will do a live stream of trading these one day soon, once I get a bit more confident in the strategy. At the moment it's just going through testing period, so give me a bit more time and then I'll show you how to do it all the time. So today I took the sell on Aussie dollar and US dollar. Euro USD was a sell. What other ones? I think that was it. And then obviously the gold one was a buy. But yeah, I'll leave it there. We just went through a number of pairs, showing you all kind of trades. I hope that helps. Message me if you've got any questions. Tried to make it as short as I could. Yeah, I think I've done everything. Take care. Goodbye.